Hello. In today's video, I'm going to continue with the MACD moving average follow-up. The last two videos I covered version 1, which is what we are looking at right here on this chart. And I covered version 2, which is this chart. Today, I'm going to cover version 3. Version 3 is an exact replica of the original algorithm, and it needed to be extensively tested because it uses a very advanced feature in Jackrabbit called signal inversion. For example, you see that it buys when the price action is above the average, and it sells when the price action is below the average. That is completely opposite to normal trading paradigm. You're supposed to buy low, buy below average, sell high, sell above average. The original paradigm, the original equation, is exact opposite. It sells below average and it buys above average. So I needed to make sure this was carefully checked and tested. In fact, I ended up listening to the original video at least a good dozen times to make absolutely sure I got this part of it correct. Now, I have not modified MACD at all from version 2. The MACD settings are identical. Only version 3 got modified with the moving averages. So let's go down to where everything gets started. And the differences between version 2 and version 3. I use both the fast line and the slow source, fast source, slow source as the closing price. The current price action drives both, so there's only one single line, exactly like the original. Both moving averages are identical. I'm using momentum to drive it, and the length is 200. So this is an exact replica of what you will see on the original video. Now comes the one part that is critical. At the very bottom, invert signals. Normally this is no, but for the original exact replica, this has to be yes. This is a very advanced situation. It is not something that you want to take lightly if you want to use it. It has its place in trading, as this demonstrates, but you need to know what you're doing and you need to carefully test it. There are no substitutes for careful analysis with this kind of an advanced algorithm. So, make sure when you use invert signals, take your time. Mistakes here will cost you dearly. Now back to the original. Fast, slow source, both closing. Fast, slow moving average, both EMA. Algorithm is momentum. Fast and slow line are both 200. I encourage you to watch the original video multiple times. Learn this technique. It has an important place in your tool chest. So let's look at exactly how this has an impact. As you can see, it doesn't purchase as often. Now remember, this has a 62.5% win rate. So when you look at this buy signal, right off the bat, this buy signal is above the sell signal, the price action. That is important. That means that this trade by itself is going to be a loss. Now, when you take into account the average, that might be different, but to me, this whole process looks like a loss. So you'll want to be aware of that. You're going to take losses with this algorithm. Whether or not those losses overcome the profits for automated trading, that's what I am testing. The video shows the narrator doing his trades by hand. So he's automatically going to rule out mentally certain trades that may not be in his best interest. For example, looking at this here, these trades don't look very profitable. So the mind, the psychology of understanding this algorithm is automatically going to ignore this information. So that is critical and important that you understand the psychology of this algorithm. Because when you go to trade it automatically, the machine is going to do exactly what it shows. There is no psychology of, is the price action too close to the moving average? When I look at the chart, does past history show, for example, this purchase versus this purchase? The algorithm's not going to see that this is a loss. You sell here, you're losing money because you bought up here. Buy high, sell low is a very advanced technique. It's not for everyone, and I don't recommend it unless you understand exactly why you are using it. The original narrator of the video that produced this algorithm does understand this technique, and he understands the risks involved with this technique. I, on the other hand, when I developed this technique, which is not that different from the original video, the original video shows one line. I chose to use two lines and split the momentum into high and low, the red line and the green line. Now, buying is below average, selling is above average. Now, there are still cases where you can end up upside down in a trade, but for the most part, as you can see, the combination of these two does realistically do very well. That is, your moving averages and your MACDs do have appropriate conformations. They're not opposing each other as the original algorithm does. Now this, of course, is version 2. Version 1, I made this strictly by looking at his charts and replicating the signals I saw. So when I actually made this chart, I simply turned the volume off the original video and just looked at the chart. Where did his final buy signals take place? And where did his final sell signals take place? And I visually went out of my way trying to match up the lows and the highs of the price action. This is important when you're developing your different concepts, because Jackrabbit is as much about visual as it is about mechanical. When you're working with building your strategy, you're building it on a visual basis. If you see your buys above your sells, you know mentally you're going to lose money. That's not what you want. You always want as much as possible to have your buys below your sells. Now, sometimes the market is going to be backwards, and it's going to happen as you take losses. But for the most part, you always want to be on the right side of the trend. This is not a good place to be. Buying or selling here and buying here. So if you sell up here at the high point after you've bought at a low point, it's an automatic loss of money. That's not speculation, that's guarantee. So make sure you trade in the right side of momentum. Always buy low, sell high, unless you understand the very principles behind going opposite of that situation. So let's get rid of these. And talk about first results. Now, these are the paper traders I have established to test which one is going to actually be the best. So let's start with version 1, the one I made strictly on the visual reference of the chart itself, with my own concoction. Notice I started out with a loss, but then I made a profit, and I'm now above water. Overall, I've lost 60 cents. I profited 88 cents. I have a 20% profit range, or 20-cent profit range. Of course, no data here yet. So 28 cents is what my clear profit is right now, between 2 days of trading. Now, the thing to understand about this algorithm, it has a lot of retracement. It purchases a lot more than what the chart shows. 20 completed deals, 20 purchases, but the chart has shown only at best 5. So this version is very prone to retracement, even though it does very well in turning that around. So figure for 5 positions, which is what I've seen as the largest it's taken on so far, this could take a $200 budget to stay on top of it. So be aware of that. Okay, here we go. First day, took a loss. Second day, took a profit. So loss here is 14 cents. Profit is 23 cents. Altogether, I have a whole whopping 9-cent profit. Not all that stellar, but still it's in the green. So let's come down here. Statistics, it only took 4 deals versus 20. So that tells you that the level of retracement is significantly less. But because of that, it's also nowhere near as profitable. Now that may change over the long term, and that's something that I have to continue to test. Will this become more profitable at the end of 5 days, 10 days, or even 30 days when it starts really racking up the number of trades. Version 3, my control, it's been running less than 24 hours, but still it has taken on 23 cents profit. This is the one that uses the inverted signal methodology. Not bad. First day, first profit. We'll see how it does. This is actually right now sitting pretty much where version 1 is in terms of profit. It's only completed 2 deals though. So, price action wise, version 1 so far looks to be the leader. But again, we're going to let this run, see how well it does, and get the bigger picture. The inverted price action logic of version 3 may very well bring this out on top, even though it only has a 62.5% success rate. At the end of the day, when I get done with this test, the results are simply going to be the number of losses versus the number of profits. That's going to be my basis for determining which version was most successful. Who brings in the biggest profit? After all, that's the whole point of why you're putting your money in this. Now, particularly with the market being the way it is, this is a bear market. So automatically things are not working that well at all within the market. In fact, my savings accounts right now are accumulating, waiting for the market to turn around so that they can get a nice little bump on the profit. But nonetheless, this is a very aggressive market. So you need to be aware of different trading techniques, and sometimes it means running 2 different techniques simultaneously to find out which one is going to work best for a given market. And in each case, each one of these bots are identical in every way. The only thing that separates each of these 3 bots is the algorithm used on TradingView. So, let's get rid of this, get rid of this, get rid of this. Let's look at the big picture. The big picture shows between all 3 algorithms a profit of 1.17. That's not bad. So all 3 algorithms together are very profitable. Again, something to look at as a possibility to hedge against a market circumstance. It might be necessary to actually run 2 different opposing algorithms or 3 different opposing algorithms simultaneously. Don't let yourself become fixated on one direction. Stay focused on your goal, not how you get to your goal. So we're going to let this continue, and I will produce some more updates as time progresses. Until next time.